Okay, Aisyah boleh start.
Okay, hi, my name is Aisha Yasmin, 242FG242NN. Next slide, please. Okay, so what are the objectives of this study related to management accounting? So I want to address the evolving landscape of management accounting, and it is a critical role in our manufacturing environments. As we navigate through an ever-changing business world, it's essential to evaluate the relevance of traditional management accounting techniques. First, let's consider traditional practices such as standard costing, variance analysis, traditional budgeting, and cost volume profit (CVP) analysis. These methods have served us well for decades, but we must ask ourselves, are they still effective as planning and control tools in today's fast-paced manufacturing environment? While they provide a foundational understanding of costs and budgets, the rapidly changing dynamics of the market challenge us to reassess their effectiveness. Moving beyond tradition, we see the necessity for companies to embrace contemporary management accounting tools and strategies. Techniques such as just-in-time JIT, activity-based costing ABC, total quality management TQM, process reengineering, life cycle assessment, and target costing are no longer optional. They are actually essential. By adopting these modern practices, companies can improve quality, increase flexibility, reduce lead times, minimize their inventories, and ultimately lower production costs. This shift is not merely a trend, it's a strategic imperative that can enhance our competitiveness in a global market. So for my last point, I'd like to highlight the importance of investigating management accounting practices in emerging Asian economies. Through a comprehensive literature review, we can observe how both traditional and contemporary management accounting tools are being implemented across diverse countries such as Singapore, Malaysia, China, and India. Each of these nations offers unique insight and practices that can inform our understanding of how best to adopt and adapt management accounting techniques in our organization. That's all from me. I will be passing it to Sonia.
Thank you, Aisha. So the next point will be presented by me. My name is Putri Nur Sonia and my ID it is 242FG242JG. These are the next objective of the study related to the management accounting. Comparative analysis of management accounting, which is to compare how companies in different countries use different management accounting methods. This study will bring all the information together to see the bigger pictures and compare the differences and similarities. Next is enhancing the literature in the area of management accounting practices in Asia. These hope to add valuable information to help other researchers and professionals to understand how management accounting are used in these countries. Last but not least, is exploring the roles of national culture. The study wants to explore whether the culture in each country changes the way their companies use management accounting tools. And for my last point, are examine the traditional management accounting planning and control tools, which the study want to check whether the companies use traditional tools like budgeting and standard accounting to manage their finance or newer tools like activity-based costing and balance scorecard. It is also want to see how common these methods are in each countries. Thank you. That's all from me. Now I'm going to pass to the next person.
For question one, number two, I, Nurin Azhar binti Aslifi, with student ID 242FG242QF, will be explaining for traditional management budget. For Singapore, about 95% of the 170 companies surveyed by Gosh in 1984 use budgets as a financial control tool. Another survey conducted in 1996 out of 109 companies surveyed 97% reported the use of budget. Further, all the 106 companies that said yes to budgets reported that they use budgets to evaluate performance. But as for Malaysia, in contrast with the Singapore surveys, only 40% out of the 98% who said that they use budgets actually use budgets as a performance evaluation tool. With regard to final budget authorization of a particular department or budget holder, for the Sulaiman survey, 97% of the respondents reported that Senior management has greatest influence and supervises the least at 29%. Furthermore, India, by surveying 60 large and medium-sized firms, all 100% respondents indicated that they use budgets for planning day-to-day operations and cash flows. A lower percentage, 93%, said that they use budgets for controlling costs, and 91% reported that they use budgets for planning and financial positioning. And lastly, China. There is limited use of budgets in China, found a mere 4% perceiving operational budgets to be useful. Less attention given to capital budgeting in China amongst Chinese partner firms and SOEs. Government is the primary provider of capital, thus managers of SOEs have few discretionary decision-making responsibilities. Only about 30% of the 81 accountants in Bromwich and Wong's 1991 survey felt that the capital budget was useful. If capital budgeting is undertaken, the method most often used is the payback period. That is all from me. I will pass this to Soraya.
Thank you, Nurin, for the informative presentation about budget for this question. I am Arisa Surya with the ID 2424G2428X. In my segment, I'll be presenting about standard costing and cross-volume profit. Firstly, I'll be explaining about standard costing. As for the first one, we have India. These companies in India has up to 68% of survey using this method. As it was seen as a beneficial planning, control, and product costing, despite the challenges in the business environment, it is still considered as a helpful tool for the companies in India. As in Singapore, the rate of the companies that are using this method would be 56%. Despite all the criticism about how it is relevant in modern environment, the companies around Singapore are still using it. This method are used for product costing, cost control, and performance evaluation. Furthermore, we have Malaysia with 70% of adoption rate. As for Malaysia, the companies is using this method to compute performance evaluation, cost control, and product cost. Lastly, we have China. In China, this method are highly used, which is about 94% of the China firms, and it is 92% for SOEs. It is used on product costing, aid budgeting, and control mechanism. Moving on, I am also will be handling about cost of volume that are used by companies in operating in India, China, Singapore, and Malaysia. I'll be starting with China. 79% of respondents consider the cost of volume are useful. Cost of volume is known on how valuable it is in academic and practical context. It also gets adopted by large and medium enterprises due to lower uncertainty and slower production changes. It relate to call it relevant. Nextly, I have Malaysia with me, which is 53% of 214 manufacturing companies reported on using this method. It was used for planning and decision making. And among the large and medium companies, the adoption increased at the rates of 65%. Last but not least, Singapore. Ongoing adoption of cost of volume analysis, it was 60% of companies using it. The rate itself has increased over the years, where it reflects how perceived authority in decision making. That's all for me. Thank you for listening.
For this question, we are going to do it alternatively by me and my partner. My name is Nofara Inshira, 242FG24256.
And my name is Nashan Rishadani binti Sani, 242FG242HE. Me and Inshira will be presenting our points alternatively for our question.
Now I'm going to explain these three modern management tools based on India and China, and the other two countries will be explained by my friend. First and foremost is the activity-based costing method, or ABC as a short form. In India, ABC adoption is still relatively low, with only 20% of companies using it. Its slower uptake may be due to implementation challenges or the complexity of the tool. In China, the uptake of these management tools is much slower compared to India. Only 2% of Chinese companies used ABC method. This may be due to a preference for more traditional cost accounting methods or unfamiliarity with the benefits it offers, such as better cost allocation and improved decision making.
In Singapore, only about 13% of companies have adopted activity-based costing. This suggests that while it is recognized, it may not be widespread practice yet. Meanwhile, in Malaysia, the adoption of activity-based costing has seen significant growth. While earlier studies reported just 4% of companies using activity-based costing, more recent data shows this figure has risen to 28%. This reflects a growing interest in more accurate cost management methods.
Next, we have target costing. In India, target costing is on the rise, with many businesses recognizing it as a key tool for staying competitive, especially in industries focused on cost efficiency. While it isn't yet widespread, it's expected to be it is expected to see more use in the coming years as companies aim to streamline their cost structure. However, in China, there isn't much available data on the use of target costing, which suggests they may not yet be widely adopted or considered essential by Chinese firms.
This highlights a strong commitment to controlling costs from the outset. However, in Singapore, there is no available data on the use of target costing, which suggests that this approach may either not be widely adopted or not actively reported in these regions.
Last but not least is the balanced scorecard method, or also known as BSC. About 40% of companies in India use the BSC to help with strategic planning and performance evaluation, particularly larger firms that find it useful in balancing financial and non-financial performance indicators. While India is progressively embracing these management tools, China appears to be lagging behind. Same as target costing, there isn't much data on the use of BSC. This could reflect the slower pace at which Chinese companies are adopting contemporary management practices compared to countries like India and Malaysia.
In Malaysia, a very small percentage of companies, around 13%, have adopted the balanced scorecard. While there's some adoption, it appears to be relatively limited. Next, similar to target costing, there is no data indicating the adoption of balanced scorecard in Singapore, justifying that it might not be applicated there. That's all from us. Thank you. We'll pass it on to the next person.
So I am Patricia Shahira, 242 FG, 242 P1. I will be presenting question 1.4. Why traditional management accounting tools are still being used by a large majority of firms in Asia. So firstly, it is because managers prefer stability and will avoid unnecessary risks as they are more familiar with traditional management accounting tools. Secondly, it is costly to change to contemporary management accounting techniques, so firms are reluctant to switch. Thirdly, the firms are comfortable with the methods that they are used to, so as they are familiar to it. Next, employees may lack of necessary skills of the modern technique because transitioning to modern techniques often requires significant investment in software training and infrastructure. And it is also supported by the lack of top management support in supporting their subordinate to adapt to the modern technique. Lastly, most firms believe there is no need to change and it's not urgent to change from traditional techniques to the new tool, as the traditional accounting methods generally follow established regulation and standards such as IFRS, which is the International Financial Reporting Standards, as these frameworks provide guidelines for financial reporting and ensure consistency, transparency, and compliance in the financial practices. Thank you. That's all from me.